Alrighty, guys and gals, this is Blake Morrow. You are listening to the Morning Edge webinar. I hope everybody's having a great trading session and happy pre-FOMC analysis day. Let's see, hold on really quick, just making sure. I'm sorry I was running just a minute late. My dogs don't care that it's that the Morning Edge is starting, so they're like, look, I got to go outside, and I'm like, man, I've got a webinar to do, and they're like, we don't care, we have to use the restroom, and they just don't care. So anyway, that's where I was at. They could care less about my schedule, and when I'm the only one awake here at this time in the morning, I have had to take them out. So, all right, guys, sorry about that. Let's talk about, I'm going to talk a little bit about the pre-FOMC moves, and we're going to start with the euro dollar. So we have this, and Nitish just pointed out in the chat room, which, I mean, it's basically what we're looking at here. We have a triangle developing, or you can say it's a channel. Any which way you slice it, at this point, key support is at 120.55, but I'm actually just going to write 120.50 as being key support with the euro. And resistance is going to be, well, resistance right now is at 120.95, but I'm going to also note 120 because I think that's really key as well. So 120.95 and then 121.20. Okay. And we're in a range right now. We're basically in that, range, just in a consolidation, waiting for the Fed. And I'll say again, the Fed is expected to just stay the course. It should be a fairly non-eventful FOMC, but status quo also means a continued rise in risk. You know what I'm saying? So that is something that, that we have to take into consideration, which also probably will correlate into more US dollar weakness. Look, if you expect status quo today, the trade right now, like pre-FOMC, and I'm not saying this is the trade you should be doing. I'm just saying if you really feel, hey, I want to get into a trade pre-FOMC, like for me, I'm looking at the euro and I have a short from, yesterday at the 80s, and I'm going to close it out. I mean, I was hoping I'd get it closed closer to this trend line support here. But if you really want to be long something, just, or short the dollar ahead of the Fed, just get long here and put your stops below 120.50. That's the trade to take if you feel that, it is going to be status quo and you feel like there's going to be continued dollar weakness. Because I think that's likely. What I will be looking for, matter of fact, I might actually close that out right now. Hold on. Let's do it. Yeah, I'm up 12 pips. That's it. I'm just going to go ahead and close that now. I did. And let me close it via patterns in play. I was hoping we might get a little shakeout ahead of the FOMC. Okay, that pattern in play is closed. The thing is if you feel like the euro's going or the stocks are going to go higher and the dollar is going to be weaker, then you just get long here and you put your stops below these lows. Now, if you are like me, I'm looking for I think there's a risk that maybe he says something where the market goes, man, he really was, his tone has changed a little bit on inflation, or, he sounds a little more hawkish than I thought he would. And then we might get a counter trend move. So what I'm going to do, and I'm just letting you guys know, because this is kind of what's in my head and what I'm looking to do, is a move below 120.50 I am looking to short the euro on a breakdown. So that would be, we've had a 400 pip rise and then a move below here. I'm going to start looking for counter trend moves back down to, maybe like the 119 level, right? And that would be on a more hawkish surprise from the Fed chairman. That's it. Okay. And then, if you want to be patient, you just wait for a move above this 121 level and maybe 121.20, and then look for a move or a possible breakout. But that's the way I think you can trade the euro, and I think that the euro is probably the best setup for today. Personally, I think the euro's, set up in a nice consolidation, and there's not going to be a lot of surprises with the euro. When you're dealing with other currencies, like maybe the Aussie or the Kiwi, you might be dealing with more of a, risk on, risk off type of move. But this is going to be a pretty clean setup. The cable also pretty tight triangle setting up. You guys already know this is the same as yesterday. I know there's a lot of heat on Boris Johnson, but I don't think that's going to affect the cable right now, unless you start to see his leadership challenged in some way, shape, or form. But for right now, support is going to be 138 and 138.20, which will end up being this trend line support should we get down there. So 138.20. Resistance, and you can see these highs right here. That's also going to coincide with this trend line. So here, let me draw that out for you guys so you can see it. So right there, right, and right here. See how they coincide basically with the trend line. So, that resistance is at 139.50, basically 139.50. So we're setting up for a breakout with also, not only just the euro, but the sterling as well. If you want to, look for a possible trade there. The Aussie, same analysis as yesterday, but now we're setting up a potential breakout point or a double top. So if you're thinking, well, this is a double top, and you want to break below the 77-cent level, and actually I'll be a little bit more granular here, 76.90, because that's going to be the low right here. So that's important support. 76.90. By the way, this is pretty important resistance here. I should probably put some asterisks here because I think they are pretty key. All right. And if you look at the Aussie, really key support there because that sets up a double top, but also the flip side to that is a break above 78 and 78.20, and then that's the 618, and then we got to turn bullish here. 78.20, that's also key. And now remember, we're in a range. We're also setting up that head and shoulder pattern. We're setting up the head and shoulder pattern, but again, a break above the 68 or 78.20 would be bullish. That would be a bullish continuation. It would completely derail this pattern or setup actually. Kiwi, 78.60, spike high up here, right? So 72.60 continues to be resistance. It's a 618, so right there. It's a 618 retracement of this entire move. So support, spike low, you can see these spikes are all coinciding with trend lines and everything else. So support 71.45. Dollar Canadian. So the dollar Canadian, we just slumped past these lows, right? Oops. Right here. And a little false breakdown. I don't know if it's going to cause a little bit of a breakout going the other direction, but 124.20 and 123. The low today was 82, so 123.80. That's a pretty tight range. And let's also just take note that this is, you know, ascending wedge or descending wedge breakout. Couldn't build on that. We slumped back down to support. We're basically on that trend line. I actually think that support below here is more important. I know we were talking about it on the FA.C.E webinar, but if we can break to the 123.50 level, that's the 161% extension just below those lows. I think that's going to be really important, 23.50. I just need to note that number because I do think that we are still at risk of a push down to that number first. Okay. Dollar Swiss, still same analysis, 92. And support is, okay, that 200-day moving average is dropping. It's dropping every day slightly, okay? That was the inverted head and shoulder pattern target. These spike highs right here all come in right around that 200-day moving average. So that 200-day moving average is basically 90, 90, 90. So I'm going to write that down. 90, 90, and then resistance is 92. And we have to get above really this 92 level to squeeze higher. I mean, this is where, if you look at the range, like this is like from the beginning of the year, and we're basically at the 50% retracement. I mean, we're in the middle of a big range for right now. I can't imagine being too, you know, overly bullish or bearish, because even with yields rising, it's not helping the dollar Swiss right now. US dollar Norway stopped me out again. I tried to pick it up, you know, last week when I was it's like this thing's like the bane of my existence right now. And so therefore I have to leave it alone until we get back above 840, because until we get above there, it's bearish. And support will be at 820, which is the 161% extension of this move, also 127% extension of this move. So there's the low. That was the high following. 127% extension. For this move, the last move up towards the resistance, the 161% extension comes in there right around the same level. So 820 is going to be support. Like I said, the bane of my existence right now is that particular pair. Therefore, I leave it alone. Dollar Mexican peso. So the dollar Mex, you know, double bottom, it actually still projects to 2022. We, you know, came and took out some stops from maybe some traders that were buying it in European trade. You know, we took some stops below 1999. I think right now you have to just deal with this range. So you can see this, you know, this previous support, and I know we've been marking it up as 2026. Looks like it's actually 2027. But it's 2026 over here. So I'll still mark it as 2026. And personally, I think that level has to be taken out in order for us to get out of this range. 1978 is support, because that's like the double bottom support. And, you know, it's holding up all right, especially with stocks as strong as they are. I mean, the dollar Mexican peso is looking like it wants to turn higher again, but it's going to be near impossible for the dollar Mexican peso to really forge a rally here without equities coming down. And obviously, with what's happening today, the chances of that happening today probably aren't that good. So dollar yen's up with yields. And, this was my chart of the day yesterday, and I'm going to go ahead and reference the multi-year trend line. Basically, it was the broken one. We broke below, then we came back and we're back testing it, right? And so I do think that this 50% retracement here at 109.20 should cap any rally. And that's what I wrote last night. And, we got above 109, couldn't sustain, but I do think that that's going to be significant today. But support on dips will probably be back at 108.35 again. So and without really seeing what the Fed delivers us today, it's hard to be biased anything of the majors right now. We need more information, basically. Dollar index, we're in the down sloping or descending channel. This, in my opinion, is the determining factor of the dollar index recovering. And that's going to be at basically 91.40. And support will be these lows right here at 90.70. Now, and let's imagine that Fed Chairman's dovish, stocks ripped to all-time highs, which seems likely. What happens here? If we break through this support, then we can come down and test 90.15, right? So stay inside of this channel, basically. Where does that put the euro? That puts the euro probably 122, I would think. Okay. So support for the dollar index is at 90.70 or 90.67, but basically 90.70. All right, let's take a look at, let's go to, I'm gonna talk about one last thing before I let Steven Stelios take over here. Here's the S&P 500 perched at the highs, and I'm gonna give you guys the same commentary that I gave you yesterday. If I own the S&P and I knew the Fed chairman was going to be speaking today, and I had it, and I felt, hey, what's he going to say different, and is he really going to change his tune? And no, he's still going to be dovish, and he's a super dove. Why would I cover? Why would I cover or exit my S&P longs right now? Like, prove to me that he is actually turning hawkish. And if you don't prove to me that he's actually turning hawkish, I have no reason to sell my S&Ps or any of my stocks right now, right? So that's why the market's just perched up here at the highs, because they know what's coming. They know it. They know it. You know it. So, why pull the trigger? Now, obviously, that doesn't make them right. That doesn't make the market right. The market could be totally, you know, underestimating, you know, Powell, and maybe he could be a little bit more hawkish, but I doubt it. And I don't think the market doubts it either. That's why we're perched at these highs. So anyway, again, you know, give me a reason to sell. There's no reason right now. So, okay, good. We'll just stay long then. 42.10 is this 261% extension of this last leg that moved lower. It's also near the top of the, you know, this megaphone pattern. So that comes in at 42.11 or 42.10. And then obviously, while we're above 41.10, which is right here, right? While we're above 41.10, that is key. You have to stay bullish while we're above that level. No, I don't think there's any if and or buts right now. Okay. Now gold is looking a little, gold is one of those things that I think we should be watching, because if you really want a clue, like when I say clue, like a clue to buy the dollar or sell the dollar, look at gold, because gold is here in this range. And if gold takes out the highs, then you know the euro's taken out the 121.20 level. If gold breaks below 71 or 1750, then you know that the euro is going to sell off and break through that support below, like, you know, 120.50. That's all there is to it. And this is, gold should be used as a confirmation tool of that, of how you trade the dollar today, in my opinion. Okay. So 17, I'm going to write down 1750 to 60, really important support. And then resistance is 1805, because that is completes the pennant right here. I'm going to put it in neutral or in range just because we're below this trend line now. I should just keep it in bullish. I probably should, but again, the thing I don't like about gold right now is it's underperforming. I think Craig in the chat room was short some gold, and good on him, because he saw maybe the pattern completion at the time. And looks, I think gold's going to tell us a lot today about how we should be dealing with the currency market. Okay, I just do. So we'll keep an eye on it. Silver's not acting super either. 26.80, 23.80. You guys know those have been, but you should actually write 25.60. By the way, just a little heads up here. Well, head and shoulder pattern points us back down towards this support actually, but yeah, maybe the neckline is the 25.60 level. So we're going to write that down. I think that's what we wrote down yesterday. Hold on, I'll check. Yep. 26 should be 26.80, but I think we wrote down 26.70 yesterday, which is fine. Okay. Bitcoin. Just a little earlier, Bitcoin was screaming higher, and then it looks like it came off again. Yep. All right. So resistance for Bitcoin is the 50% retracement at 56K, as you guys know. I would think support right now, like intraday, we're talking more intraday at the moment, is going to be somewhere down here. So I'm going to say 51, because it actually would be, let's zoom in a little bit. That spike high to that low. So 51,000, 56,000, and that's our range. Okay. So there we go. I think we're set up for today, for today's FOMC. And guys, I just want to say, be careful, but also, let's remember who we're dealing with. We are dealing with, Fed Chairman Powell, and he is dovish. I don't think he wants to make a misstep here. He doesn't want to, to derail the stock market or the economy by, raising rates. He wants to let inflation run a little hot, which we are getting. And, again, I didn't get a chance to finish that conversation about my friend that was, we were talking a little earlier on the FA.C.E webinar, my friend that was in the car yesterday and that doesn't trade or anything. He's just invests in his, retirement account and, he's just a dude. Right. And he was, we were actually having an inflation conversation yesterday, and he's like, yeah, man, what happens to all these people that, you see these prices going up and, all these, executive level jobs have been, people keep them, but what happened with all these other jobs? And, so there's a lot of people still out of work, and how are they supposed to afford? I'm like, yeah, the great divide between, the rich and the poor, it just continues to widen. And I'm having the conversation with this guy, talking about this topic, and he's like, something's got to give. Like, he's like, he knows that I'm in the markets, obviously. And he's like, so, he's like, the stock market, that just doesn't make any sense. I'm like, yeah, So anyway, normal people, I guess the point is, normal people are really starting to talk about this phenomenon. And it was interesting to have a conversation with. He's the last person I expected to have the conversation with. He's a guy that I'll usually have a beer with and not talk anything that has anything to do with anything other than silly stuff. Anyway, Steve Stelios. Hey guys.
Hello.
Hey.
I agree. I agree with you what you're saying about Powell. He has zero motivation to do anything different.
Right. Like, why would he change his tune?
Ideally, he wants just to keep this going until the next Fed chairman comes in. And
fun part is that Powell came as a lion, at the head of the Fed. And after getting bullied a couple of times by Trump, he became a couch pet.
Yeah, that's a good analogy and very true. I mean, he got the royal beatdown. He really did, and I think that that is, a situation where, he had an opportunity to really stand out, and he just got beat down by
the system.
And by the system, actually, because it's not Trump specifically. I don't think there would be any difference at the end of the day, no matter who was president, to make it clear.
Yeah. And maybe, I don't know, I think that he had so much pressure on him, not just for rates, but really just to keep asset prices higher.
But as I said, this is what gets the Ponzi going. Yeah. If that pillar gets demolished, that's it. It's done. Done to G over.
Yeah. What we say here, Dunzo. It's Dunzo.
Dunzo. Bigly.
Anyway, well, guys, it's going to be interesting to see how the market reacts to a Fed that just continues to be dovish. I think everything is very, it's obviously very excessive, but can it be more excessive? Sure. Why not? People will continue to chase these assets higher and higher and higher. And there will be a breaking point at some point. I don't think today is necessarily the day, but you never know. You never know what the Fed chairman might slip up and say. So,
yeah.
All right, guys. Well,
Yep.
I'm going to let you take over. I want to thank everybody for being with me, but I'm going to let Steve and Stelios kind of give you their thoughts, and because you're probably sick of hearing mine because it's the same old. Hey, here comes the Fed. Hey, he's going to be dovish. No, but maybe you guys can enlighten everybody regarding, I'm actually more curious, and you may have heard this in the analysis, is I'm more curious about these precious metals because they're not acting well. And when they're not acting well, it starts to trigger how I might respond with the dollar. Where's my gold? But yeah, this move down in gold today, down towards support, I think is, kind of important. So I think it's something that, we need to be paying attention to. Anyway, I'm going to let you guys go from here.
Yeah. Thank you, Blake.
Thanks, guys.
Yeah. So the FOMC, I mean, we said it all. There's zero motivation for Powell to do anything different. He doesn't want to disturb the markets. He doesn't want to hike. He doesn't want to tighten. Ideally, he wants this situation just to continue for a few more years. Then he can pass the baton to another Fed chairman, and he's going to be, he's going to say, right, the bomb didn't explode in my hands. Unfortunately, I don't think that's going to happen.
It's the usual path that politicians follow as well.
Yeah, true. So let's see, let's see what happens.
We don't see your charts, guys, by the way.
Oh yeah, Steve.
Stelios, if you can grab them, because I have a little bit of an issue with Camtasia, so I'm trying to resolve this. So save me a couple of minutes.
Hold on a second. Let me just grab.
Oh, Steve, if you need my help, I can help too. But
no, it might take just 1 minute because something froze here, so I'm trying to resolve it.
Share screen. Desktop 1. Share. There we go. So yeah, so we're on a holding pattern, and it's I don't see what's gonna be different tonight, but today, but we'll just have to wait and see. I still think the dollar is behaving a little bit. It was strengthening. Now it's the last few days sessions. It's weakening a little bit. It's I have always thought that it would be strengthening enough to take euro dollar down to like 115, which is this descending trend line, and then just go to the moon, which I think it will eventually. But it's just trading very nervously now, and it's just going. We've come back to this zone here, 120, 121, and it really is going to be either back down to 115 or just just not going to look back at all. What do you think about the Bund, Steve?
Still, I need to restart my computer as it seems.
Go for it. Okay.
Okay.
I'll talk for a few minutes and then you can join back.
So what did you ask Steve about? What do you think about the what?
The Bund, because I've been short the Bund for a while.
And you know what, Stelios, I'm glad you bring that up since yields have been moving higher. The Bund, if you haven't seen it, look at the trend line from basically the lows of April 2011.
Oh, 2011.
Yeah.
Oh, that doesn't have that. Why doesn't it go that far?
Well, anyway, what you can do is just connect those lows right there, and
oh, I'm sure.
Actually, here, you know what? I want to see what you're seeing, but let me just show you really quick.
Okay.
This chart really quick, because you're not seeing the information. You're seeing only from here. So you're seeing from the lows of 2013. You're seeing this, right?
Yeah. Wow,
okay.
Yeah.
And now here's the lows right here from 2011. And so we're, trading slightly below that trend line right now. So I'm actually pretty focused on how we're going to react at all this support from 2019 to the lows of 2020.
That's like 168, right? 167, 168.
Yeah, 167, 169, somewhere between there. So anyway, I'll let you take over the screen again, but I wanted just to show you that trend
Sure.
line we've kind of we're pushing below it right now. So.
Yeah. Well, I've been short for a while, and the good thing is that I've been short by an ETF, which has a cost, every year, which is less than 1%. But obviously, you have negative yielding bonds, so the cost to hold this is almost zero. So I like that, and I've been short, and I'm waiting to see what's going to happen in this area, like exactly like you said, 167, 169, somewhere there. But if we do see, the question is going to be US 10-year. If that continues to trade above 150, this zone down here, which has been, what was it? I think the breakout was around 150. If we continue to trade above there, and if we do, we're definitely going to be bouncing up towards 2% and maybe even higher. If that happens, then the bund has to break down, and maybe even hit positive yields. It hasn't been a while since the bund has been yielding positive, but it could do. So I'm waiting patiently on that trade. It hasn't been doing much. It's a little bit in the money, but really has been doing very little.
Yeah, I was going to say, with the 10-year yields, if they continue to go up, it should drag global yields higher for the most part as well.
Relative value trades are going to take bunds higher in yield, theoretically.
Now, how's the market? How's the German DAX react to higher rates? Do you think it's going to be more sensitive to higher rates, or is it going to be like the US, where US equity markets thus far have just brushed them off?
Well, theoretically, they should be reacting negatively to higher bund yields. The US situation, I think equities haven't really cared about rising yields because, yes, we did break out, but in the grand scheme of things, it's not a big move yet. We're only back to where we were trading. Where was it? Pre-COVID, basically, which was kind of the norm.
Right.
But I do think that the DAX has to turn lower if bund yields turn higher. I mean, it has to. Obviously, it has to be a move that counts. No, not a small move. We have to move a considerable amount before stocks really start taking notice. That's my view. Cryptos, very interesting. We were talking about these levels in Bitcoin for a while. I still think 40 to 42, 44,000 is huge. We're kind of consolidating here. Obviously, we bounced from the big drop, but we're still, we made these new lows. I think we do have a chance of getting closer towards 42. That's going to be the big level to decide. If people want to be long and they've missed the boat, that's definitely a good place to start looking as a risk reward trade. But I have nothing on this. I'm just monitoring it.
By the way, still.
Oh, you're back. Okay, good. Yeah, we just talked about the bund a little bit and 10-year yields in the US and just a little bit about Bitcoin.
Yeah, we're just talking about how the German DAX might react if we start to see a move from here, considering that bunds are already sliding and yields are rising. If they continue to rise, are we going to see the DAX start to have more of a negative response to the rise in yields as well?
I think not as long as inflation is appreciating in a stronger manner than rates do. So for the time being, I don't see an imminent danger about that. Now, if we get some type of an acceleration in yields higher, yeah, the market can go through some kind of a scare. I have no doubt about it.
Yeah.
But for the time being, doesn't really seem to be troubled, right?
No, absolutely not. That's what we're talking about. Yeah. Okay, are you able to take the screen now?
Yeah, absolutely.
Nothing
a restart couldn't fix.
Oh, my screen is very dark. Okay, next time I'm gonna turn dark mode off. Next time I
you're a dark man. You remember the movie, by the way, with Liam Neeson?
I do. Yeah. Well, look, equities are going higher now again.
Who would have guessed?
Yeah.
Yeah. Having said that, technically speaking, ahead of an event like today, we're very, very close to resistance. So technically speaking, somebody could make an argument that being short here ahead of the Fed makes sense. As I've said, though, many times personally, the more this situation keeps unfolding, the higher the risks I see for a melt up type of move out of this wedge before we see a deep correction. So personally, I wouldn't be trying to fade.
Yeah, like one last big move, and then it just
some kind of a vertical move.
Yeah. Well, if you scroll out enough, it's already a vertical move. I mean, look at it.
It is, but history has proved that it can go more vertical than it currently is, right?
Verticaler, yeah.
Verticaler, yeah. Like here, the last
I mean, look at
that we had. Yeah.
I mean, it's already the last few. Anyway, yeah. I get you. I agree.
I mean, just 95% higher in a year is, nothing to write home about, right? We can make it 150.
Jesus Christ.
Yeah, indeed. So, listen, nothing really has changed since yesterday. Actually, nothing changed yesterday because we had another boring day. It's very frequently the case when the market expects some kind of an announcement, some kind of a meeting or whatever. So nobody is willing to take extra risk or extra positions one direction or another. So usually ahead of such events, you see the market consolidating. So FX didn't really do anything yesterday. The only thing that kept moving is USD yen because, as I said, I'm seeing the possible elements of another move higher in yields. Now, gold was negative, quite a lot negative on the day earlier. Silver is still negative. Now gold has paid back most of its losses. This is an initial reaction lower to the possibility of higher yields. I've explained multiple times before why this is the wrong thesis and why higher nominal yields wouldn't end up hurting gold because I only expect yields going up nominally and nothing more. But an initial response to the market to that is likely. So, that's why I'm still leaving open the possibility of seeing, another move lower in gold and silver before actually continuing the uptrend. Now, other than the USD yen and a little bit the metals, nothing has really registered a move in the rest of the markets I'm monitoring. Of course, add to the list of that things like Dogecoin for for whoever cares about that. Crude oil, as I explained before on FACE, likely testing an interesting trend line resistance, previous high as well. This might be a breakout of significance if we get it. There it is. So something like that. Because there is still a possibility to see somewhat of lower prices before we go higher. Not the jury is still out about if we've seen the corrective low or not. Copper consolidating near the 127%. So keep that in mind. Copper did already hit yesterday at the highs the first upside target. The next one is at 470, almost 470, the 161.8 of the symmetrical triangles range extension. I think today is going to be important. I think that unless the market gets some kind of speech that derails the status quo, I think that the trends are going to resume. So it's not coincidental, in my opinion, that the Euro USD has stalled at this resistance. It's not coincidental that the DXY has stalled at that confluence of supports you see here. I think it won't break through them because they're important until we get over the Fed event, right? But if the Fed doesn't give us anything different, I think the market is going to feel relieved and ready to continue the prior moves. So I would expect that the S&P can break higher. In that case, the DXY would be breaking through this confluence of supports at 90.80. The euro is going to be breaking higher. The Aussie and the Kiwi are going to be continuing higher. The USD CAD, the USD NOK are going to be continuing lower. Here's USD CAD, quite heavy today, almost testing the previous low. USD NOK has already broken through the previous low, retested the triangles, broken trend line support as resistance, and is on its way on to the next objective, which is at 8.15. So, should you be fading any of that? In my opinion, you shouldn't. We can discuss tomorrow about possible counter trends if we get something significant today that's going to trigger some kind of a market reversal. But, I wouldn't be holding my hopes high, at least not as far as I know and I've seen recently.
You've been spot on with the USD NOK, Steve. You've been really, really spot on.
Yes, I've done the simplest thing in the world, trying to stick with the trend.
Yes.
Until, of course, the trend proves that something different is happening. Because, of course, at some point, the trend is going to prove that, we're getting some type of a corrective move. But, I try to refrain because the human psychology, of course, makes you want to always fade recent weakness or recent strength. I try to ignore it and stick with the facts. So, as long as the technicals tell me that we're moving in that direction unabated, I try not to bother myself with overthinking it. So I'm like, okay, the trend is still lower, hold your position and wait, nothing else to do. At some point, I know that I'm going to have to give back some of the profits because, until the market proves to you that something different is happening, of course, that means you're going to give back a little bit of your profits. But on the other hand, I'm thinking that if every time we had a hint of a reversal, I abandoned my position, I would have already surrendered a lot more of my profits over time, right?
Yeah.
So
absolutely.
I'm just sticking with it. There's a question if I can have a look at FCX and WY.
Freeport something, Morgan, whatever they called.
FCX. Okay. So
they're an energy company from what I remember.
So we were expecting higher prices, but some type of a corrective move. The corrective move, as you see, unfolded more in time. So we ended up, which is very bullish actually, because when you have a strong trend and then you have a corrective move that instead of correcting mostly in price, you correct mostly in time, that's a bullish development. So we've had, and I also showed that we should get RSI moving lower as well, which we did. RSI is still diverging, by the way, keep that in mind. So this move is very, very mature, but we created this flag, this channel, we broke above it, we came back, we retested it, and yesterday we actually found ourselves to new multi-year highs. I mean, highs that we hadn't seen since 12. My take here is that the trend clearly remains higher. I would be very scared to chase it before I see a deeper correction, right? Now, this can happen after seeing even higher prices, undoubtedly. But from a risk reward perspective, I would still force myself to wait for a deeper corrective move at some point towards this support area, at least like 25.50, before looking to buy and hold. So clearly remains bullish. A lot of RSI divergence and momentum loss, though, would prevent me from doing something with it now. But I wouldn't be fading it, on the other hand, right? We have no indication that you should be fading it. Now, this one seems to mirror quite a lot the S&P since it bottomed out last year. You can clearly see that. I mean, just by eyeballing it, it's very, very clear that it has an extremely strong relationship with the index. You know, there are stocks that don't have such a strong relationship with the index. But you can see how well it's correlated with it, right? So bottom line, what I'm trying to say here, I have no idea what this company does, but I can tell you that whatever it does, it seems to be following the index extremely closely. So I have nothing different to say than what I've already said about the index. Trend remains higher. We are at resistance. You know, clearly, if we're talking about, since we're talking about a stock, if the plan here is to add something in portfolio and hold it and wait, I wouldn't be buying at these valuations with zero pullbacks during the past 13, 14 months, but that doesn't mean you should be fading it. I know it's an unpleasant situation. You know, people look at several stocks and they're like, oh, you know, I would want to have some exposure to this. I would want to have some exposure to that. I would want to have some exposure to that. But, you know, from a prudent investing standpoint, you know, things that have moved like that, you can't be buying them when they've literally had no corrections in 13 months. It makes no sense, right? So, you know, you'll have to wait to find some type of a decent pullback to get a, you know, a normal buying opportunity. You know, at least some kind of a discount in the price. You know, they're selling you all these stocks. Yeah, that's what I think about it. Let me see what else. Any more questions? Because I don't see any more. Any more questions, guys, girls? I know we haven't said too much, but you know, since yesterday, there's nothing that has actually happened. Yes, Jane, same as crypto, indeed.
All right, cool. Oh,
SIPAPL. I guess that's silver. You know, I have nothing to add since yesterday in those because they've done really nothing. So silver, you know, has broken through this wedge, but I'm still uncertain if the larger correction is over or not. Now, shorter term speaking, you know, this was a bullish event, right? But we're now consolidating at the 38.2. So let's see what happens post-Fed. Now, having to do with platinum, I warned the day before yesterday and yesterday that this is likely unfolding as a corrective rebound. So that increases the probability that there is one more leg lower missing before we can see higher prices. So far, the price action yesterday and today points to that type of interpretation. So I think we might see, you know, a move towards 1,000, 1,040 before this market can continue to the upside, which I think it will. And having to do with platinum, with palladium, I think things are very clear. Palladium is trading at all-time highs. Momentum remains very strong. So this is a different type of a market. I think it's very strong and you shouldn't be fading it. As long as we trade above 2,700, keep looking higher. The next upside objective is at 32.56. As simple as that. I don't think you should be trying to fade this market. Okay, guys, gals.
awesome. Thank you. Good luck, everybody, today.
Happy Fed event, and let's see what we get.
Thanks, Steve. Thank you, everybody.
Bye-bye.